things going on. I mean, it's visible to the naked eye, but what else is visible? Well, when we look at it from a narrative, we've already seen that there's obviously value, but the idea of being able to verify the value narrative, why would we be selling oil here in the first place? What was the storyline behind this short sell into a top edge like this? What are we thinking about when we come into a top edge like this one here? Well, one of the things we talked about that illumination is who's in charge of the marketplace. Is it the high frequency or the low frequency? Now, what we're defining by high frequency, of course, is our old friends at Citadel. These are the high frequency guys. If they're in charge of the market, we don't want to be fading against these guys, right? If they're in charge of the market, we don't want to be fading against Citadel, right? They don't lose very often. That's the main thing, right? So we're very, very careful. So when I'm looking at this top edge, the question I've got is, the liquidity sweep's not based on who's in charge of the market. The liquidity sweep is based on how much R squared the commercials have to take advantage of this. Well, Citadel don't want to trade against the commercials. The commercials can still knock down Citadel's trades, can't they? So the idea as traders is we want to try and make sure both of these two entities are working for us, not against us. So when we look at it from a market maker's point of view, about a frequency point of view, I want to see the blue line trading above the black line. So let's take a look. Was the blue line trading above the black line? In other words, was the market maker in control of the top edges? Yes or no? So we've got a great start to this. The market maker's in charge of the top edge. So we now know that if we get any type of commercial value, the commercials are just going to annihilate this, right? It's a very, very straightforward trade for us now. So we now know that we can take a safe trade up here. We don't even need to have a high bar to entry to get into a short trade. We just have to have an entry, right? We just have to have an entry process. Now, obviously, if we're going to sell it on the way up, we've still got to be careful. We're still got to be careful, but we've got a fair amount of gap here. There's a fair size containment on this. The bigger the containment, the better the trade opportunity is for us. We've got the divergence in the background to help us as well. Look, see the divergence on the Citadel guys? And the Citadel guys are going to now see this as an opportunity to do what? Sell it if the price breaks sell side. Remember, they're momentum traders. They're momentum traders. So they're going to now know that they've got a very good short coming up. We know that they've got a very good short coming up. We know we're going to make a lot of money on this short sell. So the next thing we need to analyze is whether the commercial has a reason to sell the top edge. And we do that simply by asking R squared the question. How many of our triggers do we get for the top edge? Now, I've not set this up as the way we're talking about. I'm now looking at it from this point of view here. We've got our Brent oil spreads here. So one of the things we can see is that we get a very sizable skew divergence here for a Brent oil sell. Do you see that? That is a very big Brent oil sell at that stage. Yeah. Wasn't visible in this candle. Was very visible in this candle. Very visible in this candle. So this is a good start. So one of the other things I like to now do is look at the other elements. So here's what makes up R squared. The blue line, the green line, and the black line. So if I see the blue line, the green line, and the black line, and they're all above these red thresholds, all of them are above the threshold on one candle, aren't they? Here. See it? Right there. Every single commercial is selling oil. Every single commercial algorithm will be selling oil. And it's not just the commercial algorithms that are selling oil, it's the market makers. You're now tying the market makers in with the commercials. And now you're starting to see the incredible probability now that this market is a sell. The lights have came on again in your night vision. You've been able to see in the darkness, even though this is very obvious and very visible, you've still been able to see that change in frequency in the background, haven't you? So with that change in frequency in the background, that leads us to that short sale right there. And there's the outcome. We make a very special $700 splash on that short sale from that incredible piece of information. And again, it's about putting those pieces together and not dealing when you don't have to deal. Picking your way through to the absolute benchmarks and knowing that you don't have a low entry, or indeed that you've got an incredibly high bar to entry, is incredibly valuable to me as a trader. If I know that the bar to entry is very high, I'm very, very patient, waiting for that high bar to be achieved. This is a very low bar to entry. So if it's got a very low bar, let's just get busy with it, right? Let's get busy with it and let's make some easy money. That's exactly what happened. We had a low bar to entry. We sold off the 90s and we made ourselves $700. If we can put that trade together every time, I think we're going to be very, very happy, aren't we? Incredibly happy. Yeah, beautiful, isn't it? Absolutely beautiful. Stunning trade outcome.